Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Ondas.
If you find our talks useful, please consider subscribe, like, and comment underneath. It really helps out.
And a quick note before we get into today's stock.
Yeah.
If you trade stocks, crypto, forex, gold, or indices, and want clearer buy and sell signals, you can check out VIP indicators through my link below.
Right.
So the campaign is grow $100 to $10 K with VIP indicators. VIP Indicators offers TradingView indicators, market alerts, trading education, and chart reading support with up to a 93% win rate.
Which is pretty solid, but, the tools are really just designed to help traders spot possible setups faster and trade with more confidence.
Exactly. But please remember, trading is risky.
Oh, absolutely.
Right? No indicator can guarantee profits, and growing $100 into $10 is not guaranteed.
Yeah, so use these tools for education and analysis only, manage your risk carefully, do your own research, and never trade money you cannot afford to lose.
Definitely. And just so you know, this is an affiliate link, so I may earn a commission if you use it at no extra cost to you.
All right, let's move into the wealth building context. Imagine hitting your entire annual sales goal, like every single dollar you plan to make for the entire year before the end of March.
Yeah, just closing the books on Q1 and realizing you've already matched the previous 12 months of grueling work.
Exactly. That is what just happened in the defense technology sector, and Wall Street is kind of tearing itself apart trying to figure out what it actually means.
It's wild.
Yeah.
Because we're looking at how a company transitions from a developmental stage into a fully scaled commercial defense prime seemingly overnight.
Right, and we need to figure out if this staggering revenue growth is a sustainable structural shift or just, a speculative bubble waiting to pop.
Exactly.
Now let's look at the fundamentals. Because to understand the sheer scale of the panic and excitement around the stock right now, we really have to look directly at the raw financial engine.
Absolutely. Over the past year, Ondas has delivered a 13,304.6% return.
Wow.
Right. That kind of parabolic movement doesn't just happen without a fundamental shock to the system. So in 2025, Ondas generated $50.7 million in total revenue.
And that was already a 605% year-over-year increase?
Yeah, which is super impressive on its own, and most of that was organic growth. But then the Q1 2026 numbers dropped. They reported $50.1 million in a single 3-month window.
So they essentially took a whole year of hyper-growth and just condensed it into 90 days.
Pretty much. It's no wonder the market is having a meltdown. They crushed Wall Street's revenue estimates by 25%.
And didn't management immediately raise their full-year guidance?
Yep, they raised 2026 full-year guidance to $390 million. But, looking past just those top-line metrics, the underlying unit economics are shifting in a really meaningful way.
How so?
Well, their gross margins actually expanded from 42% in Q4 of 2025 to 49% in Q1 2026.
Oh, wow. So they aren't just pushing more volume out the door. The cost to produce that volume is actually dropping.
Exactly, meaning they're keeping a larger slice of the pie for every unit sold. They're reaching a critical mass where scale efficiencies kick in.
Right, because when you buy components in massive bulk, your supply chain costs naturally drop.
Yeah, and your fixed costs like factory overhead and administrative salaries, they get spread out over a much larger number of products.
Makes sense.
And crucially, their product division reached adjusted EBITDA profitability a full 6 months ahead of their internal schedule.
Okay, I actually need to push back here, or at least, play the skeptic, because I was looking at their Q1 financials, and there is a glaring number that makes absolutely no sense to a layperson.
The net income figure.
Yes. It says they had a GAAP net income of $361 million. If they only had $50.1 million in revenue coming in. Yeah. How on earth is the net income 7 times higher than the top line?
Yeah, it sounds like pure accounting magic.
Right. It seems impossible.
It is the perfect question to ask. Because if you just skim the headlines, you get a highly distorted view of their cash position. That $361 million figure is heavily influenced by warrant revaluation dynamics.
Okay, let's break that down for everyone listening. What exactly is a warrant, and how does revaluing it create phantom income?
Sure. Think of a stock warrant, like a coupon that a company gives to early investors. This coupon gives the investor the right to buy stock later at a specific locked-in price.
Okay, so let's say the coupon says you can buy a share for $5.
Right. And if the stock is currently trading at $2, that coupon isn't worth much. But if the stock suddenly goes parabolic and shoots up to $20...
that $5 coupon becomes incredibly valuable.
Exactly, because you can use it to buy a $20 stock for $5. Now, accounting rules require companies to constantly recalculate the value of these outstanding warrants as the stock price fluctuates.
So because the Ondas stock went on a 1,300% run, the accounting value of those warrants changed drastically.
Bingo. Depending on how they're structured on the balance sheet, a massive swing in the stock price triggers a non-cash adjustment that flows through the income statement.
So it looks like hundreds of millions of dollars in profit on paper, but no actual cash changed hands.
Right, it's just a paper gain.
So the massive GAAP net income is essentially a mirage created by accounting rules. It doesn't mean they can go spend that $361 million on new factories or anything.
The cash isn't real. But if we strip away the accounting quirks and look at the core day-to-day business, the product-level EBITDA profitability, that milestone is very real.
So the factory floor is actually turning a profit.
Yes, it proves the fundamental business model of building and selling these systems is working at scale.
That brings us to the catalyst timeline, because you don't scale a defense tech company to $390 million in projected annual revenue just by tweaking the factory floor. Hypergrowth is incredibly expensive.
Oh, absolutely. You need a war chest, and Ondas has built a fortress balance sheet to fund this aggression. Since mid-2025, they have raised $1.8 billion in financing. Yeah, and as of March 2026, they are sitting on over $1.4 billion in cash equivalents, and short-term investments.
$1.4 billion in cash. But, you don't hoard $1.4 billion just to let it sit in a checking account collecting interest. They armed themselves with that cash specifically to go shopping.
Exactly. They are executing a ruthless M&A strategy, mergers and acquisitions. In 2026 alone, they closed 5 acquisitions totaling $557 million.
Which would explain why they are running with negative free cash flow right now, because they are scaling so rapidly and absorbing the costs of integrating these newly purchased companies.
Right. They are willingly bleeding cash on operations today because they have this massive $1.4 billion safety net. They are sacrificing short-term cash flow to basically buy up market share.
It's like playing Monopoly and just buying up all the high-value properties early on, even if it leaves you broke for a few turns.
That's a great way to look at it. The strategy completely removes near-term liquidity risk. They don't have to worry about making payroll or keeping the lights on.
They are completely self-funding a hyper-aggressive pipeline.
Yes, and our research shows they have over 25 more acquisition opportunities on the table, many in advanced stages, that could represent another $500 million in run rate revenue.
Let's talk about what they're actually buying, though, because defense tech is a very broad umbrella. You can't just buy 5 random companies, mash them together, and call yourself a defense prime.
No, you can't. And they have a very specific vision here, something the military calls a system of systems. Ondas is building a unified multi-domain platform.
So we're talking about integrating things like counter-UAS, which is drone defense, with ISR, right?
Yes, ISR being intelligence, surveillance, and reconnaissance. Essentially the digital eyes and ears of the battlefield.
Okay, what else are they adding to this mix?
They're adding loitering munitions, which are basically kamikaze drones that can circle an area until they find a target, unmanned ground vehicles, and stratospheric sensing for high-altitude data collection.
So to understand the mechanism here, let's look at how the military usually buys things. Historically, the Pentagon might buy a radar system from Lockheed Martin, drones from a startup, and a ground control station from Raytheon.
Right. And the nightmare for the soldiers on the ground is that none of these systems speak the same digital language.
Exactly. The radar can't talk to the drone without a massive, clunky translation layer. So Ondas is stepping in and saying, stop duct taping different brands together. We will sell you the entire integrated ecosystem.
The interoperability problem is one of the biggest bottlenecks in modern defense. By offering a closed-loop system where, say, the stratospheric sensor automatically feeds data to the loitering munition,
without a human having to manually transfer coordinates between 2 different proprietary software.
Yes, it creates a massive moat.
A moat built on switching costs. If a military base installs an entire Ondas ecosystem and everything works perfectly together, they are never going to rip out that entire multi-million-dollar infrastructure just to save a few $1,000s on a slightly cheaper drone from a competitor.
Exactly. They are locked in. That lock-in is the holy grail of defense contracting. But the real structural advantage, the thing that separates Ondas from the dozens of other drone startups, came from their acquisition of a company called Mistral.
Mistral wasn't just a technology play, right? It was a bureaucratic play.
Completely. Mistral gave Ondas prime contractor status. They landed a $982 million IDIQ contract with the U.S. Army for loitering munitions.
Let's define IDIQ for everyone listening. Indefinite delivery, indefinite quantity.
Think of an IDIQ like a master hunting license. It doesn't mean the Army is writing a check for $982 million tomorrow.
Right.
It means the Army has set aside up to $982 million over a specific time period, and only the companies holding this specific IDIQ contract are allowed to bid on those funds.
So it's an exclusive club. If you aren't a prime contractor on that IDIQ, you can't even sit at the table.
Exactly. You are blocked from top-tier defense budgets.
Hmm.
So companies like Red Cat Holdings or Draganfly, which have great technology but lack the scale, are effectively gate-kept out of the massive government spending sprees.
Because becoming a prime contractor historically takes decades of relationship building, lobbying, and proven performance. Ondas just bypassed that entirely.
They used their massive cash pile to simply buy a company that already had the keys to the castle.
And we really have to factor in the Palantir partnership here because this is where the hardware meets the software.
Oh, absolutely. Palantir is already deeply embedded in the Pentagon's data infrastructure. They handle the massive data ontology making sense of millions of data points on the battlefield.
So teaming up with Palantir is the ultimate credibility signal.
It really is. It tells the Department of Defense that Ondas isn't just building cool hardware. Their hardware is sophisticated enough to integrate seamlessly with the absolute highest levels of military AI and intelligence platforms.
It's basically the brain of Palantir connecting directly to the muscles of Ondas.
Exactly.
Now let's pivot to the chart. Because with all of this, the $1.4 billion in cash, the prime contractor status, the Palantir AI integration, and the 1,000% revenue growth, how did the market actually react?
The immediate reaction to the Q1 earnings was explosive. Shares surged 26.5% intraday, hitting $11.73 on massive trading volume.
Wow, so a decisive technical breakout.
Yep.
So what does market sentiment look like? Are analysts universally obsessed with this stock?
Actually, no. When you read through the analyst reports, the professional money is deeply aggressively divided on what to do next.
Which is fascinating. You'd think 1,000% growth would be a slam dunk. Where is the divide?
Well, you have firms like Northland Securities and Ladenburg Thalmann issuing strong buy ratings, projecting price targets up to $18.
Okay, so they are looking at the macro tailwinds.
Yeah, we are in an era of rising geopolitical tensions globally, expanding defense budgets, and a massive shift toward autonomous warfare. The bulls argue that the market still hasn't fully grasped the scale of what Ondas is building.
But then we look at Zacks research, and they downgraded the stock to a strong sell.
Right.
A strong sell on a company growing revenue this fast is a major red flag, which brings us to the elephant in the room, the valuation multiple. Ondas is currently trading at 10.54 times their forward 12-month sales. Not earnings, sales. The industry average for legacy defense companies is just 1.76 times sales.
That multiple is the terrifying part for the bears.
All right. If the entire market already knows about the backlog and the Army contracts and Palantir, isn't all of this phenomenal news already aggressively priced into that 10.54x premium? Aren't investors paying a massive premium for absolute perfection?
That's exactly it. The valuation-conscious bears argue that at 10 times sales, there is zero margin of error.
Bro.
If the Army delays a contract by 6 months, or if there's a slight hiccup in supply chain delivery, that premium multiple will collapse violently.
They argue the stock is priced as if every single thing will go right for the next 5 years.
Precisely.
Now let's talk about the risks, because things rarely go perfectly right when you're executing this kind of strategy. We talked about their $1.4 billion war chest, but that cash didn't fall from the sky.
No. Raising $1.8 billion in financing comes at a very literal cost to the people holding the stock.
And what does that cost?
Severe shareholder dilution. To raise that capital, Ondas had to issue massive amounts of new shares. And there's a very critical upcoming event. On May 28, 2026, shareholders are being asked to vote on a proposal to increase the authorized share count from 800 million to 1.2 billion.
That is a 50% increase in the potential number of shares. For you listening, the mechanism of dilution is straightforward but painful.
Yeah.
If you think of a company's total market value as a large pizza, dilution doesn't make the pizza any bigger. It just slices that exact same pizza into smaller and smaller pieces.
Exactly. The company sells those new slices to raise cash, which means the slice you currently hold suddenly represents a much smaller percentage of the total pie. Your ownership is watered down.
Furthermore, there's $89 million in warrant liability still out there.
Right. So the bears make a very compelling argument. Even if Ondas succeeds operationally, even if they become the next Lockheed Martin, the individual retail shareholder might not see the full financial benefit.
Because their ownership is being constantly diluted to pay for the next acquisition.
It's a brutal irony. The exact thing that makes Ondas so successful, their relentless M&A monopoly strategy, is also their biggest Achilles heel. The constant need for new capital acts as a massive gravitational weight on the stock price.
But beyond the financial engineering, there is a very real physical risk here too, integrating 5 companies in a matter of months.
The operational execution risk is immense. Integrating 5 distinct defense tech companies isn't just about combining spreadsheets. You are dealing with completely different corporate cultures.
You have to merge completely different supply chains, different manufacturing standards.
And somehow synthesize 5 different software architectures into one cohesive system of systems.
Integrating 5 different tech companies at this speed is like trying to take the engine from a Ford, the transmission from a Honda, and the software from a Tesla, and making them run perfectly together at 100 miles an hour without ever doing a test drive.
That's a great analogy. If the software from the newly acquired drone company doesn't communicate flawlessly with the legacy radar system they just bought, the entire pitch to the Pentagon falls apart.
So the risk is that management gets overwhelmed. If they suffer cost overruns during integration or technical delays in actually converting that massive backlog into hard cash, the bears will be proven right.
The entire narrative hinges on flawless execution.
Though the bulls, I assume, would point right back to the Q1 numbers we started with. The fact that the product division hit EBITDA profitability 6 months early is a very strong signal that, so far at least, management is actually managing this integration without crashing the car.
Yeah, the early profitability is really the strongest counter-argument to the bears. It proves the integration is actually generating efficiencies, rather than just burning cash.
So with everything on the table, what's the final verdict?
When we weigh the core fundamentals, the massive $1.4 billion cash safety net, and the sheer momentum against the risks, our research leans heavily positive. Despite the glaring risks of continuous dilution and a very steep valuation premium, Ondas has achieved an 8 out of 10 bullish score.
Okay, but the timeline is critical here right now.
Very. The target horizon here isn't a quick flip based on momentum. It requires a multi-year hold, specifically eyeing Q1 2028. That is the internal target for when management projects the entire company will achieve adjusted EBITDA profitability.
This all really matters because Ondas is providing a real-time masterclass in how modern capital is weaponized. The defense contracting world is historically an old boys club. You don't just show up as a startup and get a billion-dollar army contract.
No, you don't. Ondas looked at the decades of slow, grueling relationship building required to become a defense prime, and they simply bypassed it. They raised a massive war chest and bought the companies that already had the keys.
They are completely rewriting the playbook on how to penetrate high-barrier industries.
They are. But as we watch this play out, and as defense strategy shifts entirely toward these autonomous systems of systems, it leaves us with a much larger, frankly more unsettling question to consider.
Which is what?
As companies like Ondas successfully create these fully autonomous, closed-loop ecosystems where a sensor spots a target, Palantir's AI processes the data, and a munition is deployed to destroy it, we aren't just shifting how the military spends its budget.
Right.
We are rapidly approaching a reality where the entire kill chain is connected by software. When you have an integrated system designed to operate at machine speed, the human element is increasingly removed from the equation.
Which brings up a massive issue of accountability. If the decision to pull the trigger is automated through an interoperable web of acquired technologies, who takes the blame when an autonomous system makes the wrong call?
Exactly. Is it the sensor manufacturer, the AI software provider, or the defense prime that duct taped them all together?
It's a chilling thought about the future of software-driven warfare. Definitely something to mull over. And if you want extra help reading trading charts, you can check out VIP indicators through the link below. The campaign is grow $100 to $10 with VIP indicators.
Yeah, and their tools include TradingView indicators, marks alerts, and trading education with up to a 93% win rate.
But remember, trading always carries risk, and no profits are guaranteed, nor is growing $100 into $10K guaranteed.
Right. Use the tools for education and analysis, manage your risk carefully, and always do your own research before making any trade.
Exactly. This is an affiliate link, and I may earn a commission at no extra cost to you.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.